let's look at this retail ETF. First off, read this disclaimer carefully. Okay, retail, that's in the consumer cyclical space. Here is the ETF. 94% from the 52-week low, pretty close to all-time highs. Okay, let's quickly also look a bit at the zeitgeist themes. Pretty massive overperformance vis-a-vis the S&P 500. The ETF in question in this video is the XRT Spider S&P Retail ETF. Let's first look a bit at the seasonality. Here you can see that we are currently in August, and August, September, October, they're some of the weaker months for this ETF. Let's look at it against the S&P 500, like that, and we want to look at it a bit more long term. So, August, kind of a bit mediocre, like in the middle. 47% of the time XRT outperforms the S&P 500. However, September is one of the strongest months, but it is only 64%, so it's not like a super massive percentage numbers here, but 64%, it is it is better than 50-50. Let's look at the charts. Okay, so weekly data points, and let's go a bit far back to get the bigger picture when it comes to trends. Okay, so now we are looking at all the data we actually have available for the XRT, and one of the things that jumps right out at me is that after the financial crisis, there was a major rally which did move in cycles. Relatively frequently we had some pullbacks to some of the slower moving averages, the 20-week and the 50-week moving average being most frequently used. Interestingly, the XRT, it made this high here in 2015, and ever since that it's been moving sideways in this multi-year consolidation range. That's very interesting. Then right here we do have the pandemic, a major crash, and then a super surge in the price. You have to ask yourself the question, is retail in a more healthy place here than it was here? No, I mean, you can't really explain this massive move with, retail, being so much stronger. A lot of this move is, of course, due to the central banks and, flooding the markets with liquidity. The issue is that this ETF likes to have these pullbacks. They are relatively frequent. We do see these cycle patterns. Given all of the history with this ETF, this rally here and this sell-off were an anomaly. We are very much, due a pullback at these levels. You see that these highs is where there's been problems in the past, and literally given all the history of this ETF, I mean, even if it were to make a new all-time high and just surge way upwards, we would still expect there to be a pullback. Okay. You can see here that the latest move, it's been extremely bullish, so let's be perfectly clear, the bulls are in control from a purely technical standpoint, but it's becoming so euphoric, the RSI is getting so stretched, that we do definitively expect a correction. You see here with all the history here, this ETF does not like to be very overbought or oversold, meaning the RSI is rather reliable in this instance. You see, in these previous times where we were overbought, we did have a correction. This correction right here was, minus 15-ish%. That's a good short. Here we got overbought. On the RSI weeklies, minus 26%. I mean, yeah, I just expect it, given literally all of the history. And the accumulation distribution line, it's been along with this consolidation range, it's been basically flatlining for some time. Here you can see that the correlation with the S&P 500 is 28% positive. So not a very strong correlation. Here with the daily data points, you can see these cycle patterns very clearly. This is the basic psychology of this ETF. It likes to have frequent corrections. There's a big rally and there's a correction. We've now had a very big rally. You could make the case that this was a little bit of a correction. Let's actually measure it. 12-ish percent pullback. It's a decent pullback, but you need to look at the pullback in context of the rally. And as such, if you look at some of the prior instances where we had a major rally, as an example here, we have a major rally, then we have some pullbacks, but we do eventually get a bit of a deeper pullback. So that's basically my expectation here. We're overbought here on the daily data points. Yeah, there's a 96% positive correlation here actually with the S&P 500. But that's on the dailies. Okay. Let's look at some additional data. Let's look at Finviz. Here we can see that there are options available, so that's very good. There's a bunch of strategies that can be employed. It's shortable. The year-to-date performance, 11%. The performance for the quarter is a whopping 42-ish%, very impressive. Saks.com gives XRT a number 2 buy. Here, let's look a bit at the dividend and the valuation. Okay, so the PE is currently at 19.6. This is the car ETF. It has a way lower PE at 8. Then online, this is the ProShares online retail ETF. That one has a PE of 41, definitively much higher. If you look here at the dividend, there's a 1.3% dividend. So the dividend, there is a dividend, but nothing like really impressive. The XBuy international online retail ETF, that one had almost no dividend whatsoever. Then the BJK, 3.3% dividend. That's the Vector Gaming ETF. Okay. Let's look a bit at the fund flows last 6 months. Yeah, so you can see that at least recently there's been a dominance of buyers over sellers. That's interesting, but that of course is no shock either, given the share price going up so much. Here are the top 15 holdings: Overstock, Lithium Motors, Carvana. So a bunch of these are certainly e-commerce companies, which have benefited very substantially from the pandemic situation. Here is some sector breakdown. So 80% consumer cyclicals. Yeah, only 9% non-cyclicals. A very nice balance here in market cap. Yeah. Okay. To sum up my take here on the XRT, what would I do? Given literally all of the history we have with this ETF, we do expect a pullback. It likes to move in these cycles, and the pullbacks, even the small corrections like this one, this looks small, but this is a 12% pullback. That's a good shot. And given that there are options available for the XRT, you could make substantially more. Currently, of course, clearly the bulls are in control, but you could make a very strong case that the move has become a bit excessive. We are expecting, based on all of the history, for there to be a correction. That correction could certainly turn into a buying opportunity. Though we are in a zone where the bulls have failed many times in the past. And even if we were to surge out and break out to a new all-time high and roar ahead, it would be better to do that after a pullback, to cool down a bit. Okay. Let's now have the stock chart bonus round. Let's look at some Dow Jones companies. Here we have Visa, one of the most impressive gains we've seen in a Dow Jones stock. Above 1,000% gain. That's huge for a Dow Jones stock. We are seeing some exhaustion here in the candlesticks. The bulls are struggling a bit, but overall they are getting the upper hand. you could make the case that there's a bit of a rounding-ish, bottom-ish pattern there. The financials, if you look at the XLF, they haven't really participated in the recovery rally. So there could be some sector rotation. Let's look at Boeing, a massive crash. So Boeing, they do have exposure to the space business and also defense, but the problem for Boeing is that a very large part of their business is very discretionary. That's people traveling for holidays and business trips, but basically trips that you do not really have to take. They are nice to go on, but you don't have to go there. We have seen quite significant weakness here, so even though, yes, there was a bounce, that was, percentage-wise rather meaningful, especially if you got into the option space. 164%, certainly a good gain, but the bears have been a bit aggressive here. Though you could make the case that maybe this could shape up to become a bit of a rounding-ish bottom pattern. The nice thing about Boeing is that they make the planes, okay? So this is very different from an airline company as such, because the airline companies, they are expendable, they can go bankrupt, and that's just how it is. But it is inconceivable that Boeing will go bankrupt. It is strategically too important. It is too important to fail, beyond simply being too big to fail. Let's look at another stock, and that is 3M, MMM. So here we have a very interesting pattern. I mean, you see this mountain. Of course, you could make the case that we have some head and shoulders patterns, but it's a very clear technical formation from the bulls dominating to the bears definitively being in control. We have seen that the green 50-week moving average has been like the critical level. Bulls try, fail, and now they are trying it again. It is interesting to see that after this pullback, the purple 20-week moving average, it's been used as a very clear support level. So this is one of those that, it's interesting. At this point, after this major pullback, let's actually measure how big the pullback is. So it was a pullback of minus 55%, and bear in mind that this pullback started way before the pandemic. So watch out for this one turning into one of those speculative bullish opportunities, because when you have a situation where many stocks are like super overbought, the fund managers, mutual funds and ETFs and stuff like that, they will rotate out of the super overbought ones into those that are perceived as being a better opportunity. So watch out for this one becoming a rotation stock. Okay, whatever you do, of course, don't fight the trend, and may the trend be with you.